Well, this week, the OECD downgraded its forecast for the global economy, including here in Australia. Here it says the economy will grow at 2% next year, not 2.5% as it's previously said. By coincidence, this week, the OECD Director General, Mathias Cormann, was in Australia. I caught up with him and asked if the global economy is headed for recession. Mathias Cormann, many thanks for your time.
Good to be here.
This week, the OECD downgraded the outlook for global economic growth. Are you confident that the world can avoid a global recession?
Well, look, we're not forecasting a recession. We have downgraded for the second time now our global growth outlook, and fundamentally driven by the ongoing war of aggression by Russia against Ukraine. As the war started, the world was still recovering from the impact of the pandemic, but that recovery was actually quite strong and quite rapid. But since February this year, of course, what we've seen is a significant slowing of global growth, higher inflation, and of course implications for energy and food markets around the world. And so, yes, our outlook is more pessimistic. I have to say the risks are very much tilted to the downside, but at this point, we don't see a recession.
Okay, so individual countries quite clearly are going to be impacted by this, more or less. There are going to be some countries inevitably that will fall into recession. We saw the UK responding this week, for example. So,
globally in aggregate, we are projecting a 2.2% growth next year. But indeed, yes, individual countries will see their economies contract, and it does depend on the level of exposure, for example, when it comes to increased energy prices. And if I look inside Europe, obviously there are some countries that will be more impacted than others, depending on their exposure traditionally to Russian gas, oil and gas.
Okay, so then comes to an issue that you've got a Northern Hemisphere winter coming, and then there are already energy shortages. There's question marks about food. So is there now a real danger that some countries could face food shortages, or that there could be hardship caused by those energy shortages?
Well, there shouldn't be food shortages. The availability of food will be there. The risk is that countries around the world react to what they perceive the risks to be, and that they impose export restrictions and the like, which would make a difficult situation even worse. If I look at global production of wheat, for example, global production of wheat in this most recent season has been higher than the year before, and we don't expect a material decline in production next year. But of course, if we see markets react to their future expectations as opposed to what is actually most likely to happen, then those reactions in themselves can drive prices up and can also prevent food supplies getting into those markets where they're required. So there is a real pressure on food prices. There's a real risk that some parts of the world will not have access to the food they need, but it's more a logistics issue. And so what we're saying at the OECD is to countries around the world: keep your markets open, keep ensuring that products can flow across borders. This is not the time to impose restrictions on markets.
But of course, a lot of this will depend on how long the conflict continues inside Ukraine. Are there any signs that that is not going to be a prolonged conflict?
Well, look, that is beyond my area of expertise. Obviously this conflict has now been going for 7 months. The world clearly would be better off. The people of Ukraine, the people of Russia, and the people around the world would be better off if this conflict was stopped immediately on the right terms, and indeed the world would be better off if it had never started. So that being said, you're right. It's sort of hard to predict how much longer this will go and how much worse it could get. So there is downside risk and there is uncertainty, and that is certainly true.
But the problem is here that you've got central banks now raising interest rates to head off that inflation. You've got the Bank of England, you've got the Reserve Bank, you've got the Federal Reserve, all doing that. And of course, they've talked about the narrow path of raising interest rates that could tip their economies into recession.
Well, everybody is focused on achieving a soft landing, but it is true. There is risk. If I look at the inflation story, inflation had already started, before the war of aggression against Ukraine. I mean, as the recovery from COVID got underway, the recovery in demand was so strong and so rapid that supply wasn't able to keep up. So there was that initial supply shock, and that there's initial supply bottlenecks that were starting to drive prices up. You had a lot of fiscal stimulus still, of course, going around communities around the world. And then on top of that, you now had this additional supply shock caused by the war in Ukraine, in particular impacting on energy markets, but also markets like fertilizer, for things like fertilizer, which again is having an impact on food prices. So there's a range of different dynamics driving increased inflation, and certainly what we're seeing is that inflation around the world is getting more broad-based and is at risk of being more entrenched. So we certainly support the measures taken by central banks around the world to really take whatever measures are necessary from a monetary policy point of view to get on top of inflation. And our expectation is that as these monetary policy measures take effect, as supply bottlenecks start to ease, that inflation will start to ease throughout 2023 into early 2024, though the energy story and I guess the wage inflation story are something that we will need to watch for some time.
Okay, so then take me to the UK, cutting taxes. In other words, stimulating their economy at a time when otherwise they're trying to reduce demand. I find that rather interesting, and then to see the Bank of England coming out and buying back bonds to stave off any economic downturn, it's almost as though that is counter to the measures that other nations around the world are taking. Is that the right approach, do you think?
Look, I mean, as we released our interim economic outlook on Monday, our clear advice is that fiscal and monetary policy should be working hand in hand at this time. It's obviously important for us to bring inflation down. It's important for people around the world. It's important for households. It's important for business to bring inflation down. And certainly our advice from the OECD's point of view is that fiscal and monetary policy should be aligned and should be very much working hand in hand.
Okay, so then the reason why you're here in Australia is as a result of the forum of the leading tax proponents in every OECD country. Now, they're trying to unify tax policy to ensure that multinational companies pay their fair share of tax, something that you worked very hard on when you were the finance minister in Australia. So this is also important for economies right now, especially when they need the dollars to make certain that their budgets are as strong as they can be while they're under economic duress.
Well, look, it's very, very important. Governments around the world need to be able to raise the necessary revenue to fund the public services their people expect in a way that is least distorting in the economy, like least distracting from growth, most efficient, but also in a way that is fair and equitable. And I guess what we've been seeing in recent times in the context of digitalization and globalization, that a growing number of multinational businesses was not paying their fair share of tax in those jurisdictions in which they generated some of their profits. And so what we've been working on internationally through the OECD, through the base erosion profit shifting project in particular, is to really tackle multinational tax avoidance, making sure that businesses around the world pay their fair share of tax where they operate. And we've made a lot of progress, but there is still some work to finalize. And indeed, I mean, the two-pillar international tax reform proposal, which was agreed by 137 countries and jurisdictions around the world last year, is what we're focused on implementing now, and that's one of the topics that we've been talking about here.
Yeah, Mathias Cormann, good to chat to you. Many thanks for your time.
Always good to talk to you.